Hi, Michael Glennon from Glennon Capital. In this week's video, we're going to give a quick rundown of the interim reporting season that's just finished. It was pretty traumatic for some stocks that saw very heavy falls in their share price. What we've seen over the last 6 months is, especially since Trump was elected into presidency in the US, there's been a big divergence between the share price returns of smaller companies and that of the ASX 100. So the top 100 shares performed very well. And the environment's been quite benign as a lot of large cap fund managers have shifted out of small caps, putting a lot of selling pressure onto the small cap market in general, and they've bought big caps. So what we've also seen is some of the PEs haven't really re-rated downwards for some of those small cap companies that were overheld and overbought by not traditional owners of small cap companies. So any small cap company in this interim reporting season that didn't come close to the numbers that the market was expecting for earnings were sold off very heavily. So we've seen things like Godfrey's, well-known retailer, share price down 23% from 45 mil market cap down to 35 million. Accenture Group, $544 million market cap, down 45%, so quite dramatic fall in share price, down to 300 mil market cap, so it's lost nearly half of its value in this reporting period. CSG Group's gone from $250 million market cap down 36% to 160 million. We've seen Adairs had a similar fall, down 21% from $240 million market cap to $190 million. Ten's gone from 350 mil down to 220 mil, which is 36% fall. We've seen Genworth, the insurer, go from 1.76 billion down to 1.4 billion, a 16% fall in share prices. Forex dropped from 390 mil down to 310 mil, which is a 21% fall in share price this reporting season. We've seen a company called Hansen, which does billing software, go from 700 mil down to 570 million, which is a 20% fall. And Spotless Group's down 13% from about $1 billion to 880 million. So some pretty dramatic falls there in some of the well-known small cap companies. This has all happened in this reporting season. And companies that may have only missed their earnings number by 5 to 10% have had 15, 20, even 30% falls in share prices. So it has hurt a lot of small cap investors. It just shows you really need to be on top of valuations, make sure you're holding businesses that are not overly expensive, and keep looking at value. So a lot of blood on the streets out there. And all that means, I guess, is there's more opportunities for us to start looking at. It does create opportunities when natural sellers of who aren't natural owners of small cap stocks sell those stocks, putting pressure on their share price. It means there's more value emerging. We were finding it harder to find value in the small cap market, which is why we'd held so much cash in the portfolios. We have reduced that now, and we're starting to look at some of these companies that have sold off for value and what are good businesses that were just not priced the right way. So thanks for watching. If you want to see more of our videos, look at our YouTube or Facebook pages, and thanks for watching.